I'm Raghee Horner, and I am the one of resident futures and forex traders. We're going to take a look at the markets from the viewpoint of someone who looks at currencies and commodities as well as stocks, but not looking at stocks as the main prism. So a little bit different than maybe what you're doing. And I think we're good. You know what? Let me check one thing. Sorry. You never know when someone's trying to contact you and let you know your audio and video isn't working. So I think we're good. All right. So again, welcome. I'm Raghee Horner. So glad to have you. I love these times when you and I can communicate about what's going on in the markets, taking a non-consensus view. It's what's going on, not thinking and behaving as consensus as a zombie horde out there, and avoiding some of the pitfalls along the way, and understanding to a better degree what is moving this market and how we need to play it. So I've thought about a lot of different themes for our conversation here. And the one that I've just come back to is the idea of red pill, blue pill. And that is straight from the Matrix. All right? For those of you that have seen it, I think most of you probably have, the idea that Morpheus talks to Neo, and Neo is still plugged into the Matrix. He's still plugged into the unreal world. And Morpheus says, you take the red pill, you come see how deep the rabbit hole goes. You take the blue pill, you can stay in your bliss of ignorance. And while it might seem like you always want to take the red pill, that's not always the case. You got to know what's moving the markets. And if the markets have taken the blue pill, so too must we, or at least know that's the behavior. All right. And I know it's kind of a cutesy analogy. It's one of my favorite movies. Up on this bookshelf here somewhere, I've got one of the original scripts, or print out of the original script. I love the movie. And if the markets have really taken the blue pill, how do we trade? What sectors to look at? Right? We're going to talk about that in this episode. Also, I've got all my notes here. Which markets have taken the red pill? Which markets have said, we're not rooted in what's going on inside the matrix. We know what's going on and we're behaving like that. And I'm going to talk about how to distinguish between the two, which sectors personally I am looking at. We're also going to talk about, again, red pill markets, blue pill markets, and global equities. Not just the US, gang, as a currency trader and a commodities trader. Again, my look at the markets is more 24-hour. My look at the markets is really more about understanding not just what's happening in terms of US stocks, but what's happening globally. What are central banks globally doing? What are commodities telling us about true supply and demand, and whether or not we're really seeing expansion of markets, expansion of economies? And we're really not seeing that kind of expansion at all. And the CRB index, which is, think of the Dow 30 of agriculture and grains and energies and metals, measures all those tangible grocery store commodities. The CRB index is telling us this is still very much a downtrend. We're not seeing demand for the commodities. I'll talk about energies today. We'll definitely discuss that and how energies are behaving in terms of the reopenings, which reopenings I'm interested in shorting and fading, which ones we're going to stay away from, as well as, well, 3 of my favorite positions for the past going on 2 years and how you can still get in on some of those trades now. And that is long gold, long bonds, and long US dollars. We have a lot to talk about here in this episode. Thank you so much for joining me. I can see some of the messages coming through. Yes, let's tackle a few questions. I love this. Thank you, Gerald. So my thesis is the market took the blue pill. Absolutely, my friend. But which markets have taken the blue pill? Well, let's dive into it. So as long as the markets are rooted in the reality of, and it's all reality, gang, don't get sucked into, well, this is real and this is not real. Whatever the market is responding to is real. I know that when I look at my overall portfolio and the stock markets have bounced, and there's no deduction on my P&L from my statement because, well, the market's moved from X to X plus 10, and, we're going to deduct 10% from your account because it wasn't a real move, right? We know that. The reality is your P&L, right? That's absolutely the reality at the end of the day. So yes, stocks, US stocks in particular, followed closely by Australian stocks and the Australian dollar, have firmly decided to stay in the matrix. Absolutely. You can say the same thing. What's another blue pill market? the NASDAQ tech have absolutely decided to stay in the matrix. And that's okay as long as we trade it with that knowledge and don't impose this red pill, where's the reality sort of angst against those markets. So along with the NASDAQ futures, remember, I'm a futures trader. That's the way my market works. My mind works about these markets. QQQ ETF is another way to engage the NASDAQ futures. You can play calls on either one of them. But let's think about the sectors inside the NASDAQ futures. So when's the last time you thought about cracking open the NASDAQ 100 to say, what's inside? What are those heavily weighted stocks and sectors? Well, clearly we know it's Microsoft, Amazon, Apple, Facebook, Google. Those are your top 6, and they make up most of the weighting in the NASDAQ. In fact, remember that of the 4 indices, only the Russell is not basically weighted in a high concentration manner. What does that mean? High concentration ETFs, which most of them are, high concentration indices like the Dow, the S&P, and the NASDAQ, those are weighted heavily in just a small number of stocks. How small? I think I could say with relative confidence that the overall market moves due to less than a half dozen sectors and about 20 stocks. And I'm talking the entire market because of high concentration weighting. So yes, the market took the blue pill. But again, NASDAQ, what else with the NASDAQ? XLC, which is your communications ETF, XLY, which is discretionary. And let me give you a couple you take a look at the NASDAQ as your top heading, XLY, XLC just underneath that. Let's talk about some stocks within that. Some of my favorite stocks, heavily weighted within the XLY. Okay, watch list building is so important. My favorite stocks within the XLY are Home Depot, Lowe's. Those are 2 of my favorite. Nike is pretty good. I'd keep it on NKE. Okay, Home Depot and Lowe's and Amazon. Amazon is about 25%. Talk about high concentration weighting. Amazon's about 25% of the XLY. So where Home Depot, Amazon, and Lowe's go, so go the XLY. So we've been bullish on tech and discretionary since Tuesday before last, since basically Cinco de Mayo, since the 5th of May. And we're going to continue to, again, trade those like the blue pill markets they are. So moving on then to red pill markets. What are those markets that are struggling? What are those markets that are probably a little bit more rooted in some of what's going on in this, not just macroeconomic environment, but also, this COVID. I think a lot of folks are going to point the finger at COVID. And, everything I'm saying, gang, this is just an economic view. That's it. My job is to look at how price action is moving in relation to technicals and macro and even headlines. And let's sort one thing out first. Headlines are not macroeconomics. Macroeconomics are things like money supply, central bank monetary policy, inflation, and growth. Now, can you have macro in that photographic lens type view of the different headlines affecting the market? Absolutely, but macro is not macroeconomics. Okay, a lot of people get that confused. Rate of change macroeconomics is what I've been doing for about 2 decades. My first mentor really taught it to me, and it's something that you have to understand in order to trade currencies. In many ways, you're front-running central banks. Isn't that what we're doing now? Isn't the central bank a big part of why the equity markets are up and futures indices? Absolutely. So you want to, in many ways, understand what they're seeing, understand what they're ignoring, and in many ways, front-run them. Okay. So in terms of markets that have taken the red pill, they're thinking, well, we're not rooted in that nice matrix, world of bliss. So financials, XLF. XLF is continuing to lag. One of the reasons I will not recommend the S&P as a buy in this environment, even though it's pretty tethered to the NASDAQ, is because, well, the S&P is sort of a second-rate NASDAQ. All the top 4 weighted names in the NASDAQ are the top 4 weighted names in the S&P. Whether you're looking at QQQ or whether you're looking at SPY, whether you're looking at NQ or whether you're looking at ES, same narrative, all right, same weighting. However, after tech comes healthcare and financials. Well, healthcare is doing pretty good. As we know, pandemics are good for business. And XLV, the healthcare ETF, has been doing pretty well. And that's one market that I would continue to be a bull in on pullbacks, okay? XLF is a market that I'd rather short. So you see the S&P is in a tug of war. It's in a tug of war between what's going on in tech, and it can track with the NASDAQ on one hand, but it's also in a tug of war with what's happening in financials and what's happening in healthcare. Those are the top three weighted names in the S&P, okay? So that's something to keep an eye on. So why not buy the S&P? Because why deal with something that's sort of tethered, that's got a weight in its makeup by way of the sectors, by way of financials. In fact, I like shorting financials. I won't short the S&P though, and I won't short healthcare, and I won't short tech, and I won't short discretionary, and I won't short communications. But I'm okay with shorting the XLF. All right, what else are we okay shorting? Okay, so let's move away from S&P and NASDAQ to Dow and Russell. You can look at the Dow futures, you can look at the Russell futures, or their respective ETFs, DIA and IWM. So when we look at what's affecting the Dow, I take one good look at the IYT, the transports, and I remember what Charles Dow talked about over 140 years ago, and that is so go transports, typically so go the market, but specifically so goes the Dow. And within the IYT, there are two names that are the weakest at the moment when you step back and look at their overall trends, and that is FedEx and UPS. Am I open to shorting IYT on a bounce near the top of its range, which is another way of saying wait till a market that's moving lower corrects to its resistance and short it at resistance, not at lower lows, gang. Wait for that quick bounce and seize the opportunity, because that is not, I'm telling you right now, that is not what the zombie horde is going to do. The zombie horde loves to buy higher highs. The zombie horde loves to short lower lows. And with about, I may not be specifically, again, the number of new accounts is kind of all over the place, but there are roughly 3 to 5 million new accounts that have been opened since, I believe it's April. And most of them are sort of your new traders, and they're going to behave in the way that would kind of map to following higher highs long and following lower lows to the short side. So remember that there's a lot of new participants in this market, and you can tell who's participating by looking at volume. That's something that I call submarket sonar. Volume is another thing that'll give us an idea. Not daily volume, volume at specific levels. That's really interesting stuff to look at when we are focused on who's participating and how much conviction and commitment is there. All right, so XLF, I've said, is a good market to short. The DIA, the IYT, I'm focused more bearishly there, not S&P and NASDAQ, okay? I'm also focused on shorting the Russell and regional banks. That would be IWM and KRE. Regional banks are especially sensitive to crude oil. So as crude moves higher, you'll see KRE move higher. A lot of the Permian Bays and a lot of the loans, a lot of the ties KRE has are to the energies complex, specifically the Permian Basin, the shale operations. So when crude oil does head lower, it will typically take KRE with it. When IWM, the Russell, heads lower, it will typically take KRE with it. Relative performance-wise, KRE is your best short right now when you're looking at that trio of energies, small cap, and regional banks. I really like that KRE short. So you'll notice financials are short in both sides. I'm kind of short the whole JP Morgan, Bank of America, Wells Fargo view, as well as the regional banks. I'm short financials on both sides in terms of scale size. All right. So those are markets that I like to stick to the short side of. And again, which markets are sort of blissfully ignorant, hence our blue pill analogy from the matrix? Tech, discretionary, communications, right? So we want to focus on the long side of those markets. In terms of the short side, we just talked about Dow, Russell, the transports, and the regional banks. All right. So in terms of trading and investing, am I a trader or investor? We don't have to choose, my friend. I'm both. I'm both, right? When I'm giving you are views of things that I would do on a 1-minute chart as well as a weekly, So to talk really short-term trading, in a forum like this is probably fairly unrealistic, because my short-term trades I could be out of in a matter of hours or days, minutes sometimes. But in terms of some of the bigger picture plays, these would be what I've discussed so far. These would be plays that I would be open to for days, if not maybe weeks, if this blue pill narrative persists, if there's a certain segment of the market that believes in the V bottom, if there's a certain segment of the market that believes in end of year vaccines. These are a lot of the narratives that are driving segments of the market higher, okay? All right. So next is, let's see. Um, hey there, thanks. Thoughts on crude oil? Gerald, I think crude's heading up towards some overbought. In fact, I was just talking about that today in the premium video for the Simpler Futures folks. I think crude oil is heading up towards some overbought levels. So yes, crude was moving lower. It has bounced. I mean, we had all the drama of May with negative crude and things that in my 30 years, I've never even seen before. Um, what's interesting about crude is what's going to be interesting about the way I look at the markets in terms of market trends rooted back to Charles Dow. If a market breaks its downtrend, that is in fact not an uptrend. That is a choppy market. So a lot of people look at the market kind of in this, it's either heading lower or it's heading higher, and that is it, right? We either have a downtrend or we have an uptrend. But Charles Dow and even Richard Wyckoff talked about sideways markets. Dow called them distribution and accumulation phases. Choppy wide ranges of sideways action and narrow ranges of sideways action. So a broken up or down trend immediately is distribution, immediately is that choppy market. And for me, it's going to favor the psychology of the trend that preceded that shift. So please don't assume, this V bottom is necessarily what's going to happen, although we saw it in Q1 of 2019. I don't believe that's the same situation this time around. Yes, the Federal Reserve has thrown $6 trillion, theoretically, into this market. Either by just the idea of the Fed backstopping stocks. We know that that's not even an idea because the Federal Reserve has decided to backstop high yield and junk, which is an unprecedented move by them via the Treasury Special Purchase Vehicle, the SPV. So the market probably rightfully believes that the Federal Reserve will do whatever it takes to keep stocks higher. The Federal Reserve has also tried to sort of restructure the sort of cycle of business and debt and even the market by throwing this absolute largesse at the market. It's trying to subvert a very natural part of the market, which is just a correction. I live in South Florida, and part of sort of maintaining the Everglades is from time to time a purposeful burn. They'll light a fire on purpose. So that way, when the dry season comes and lightning strikes, we don't end up with a lot of dry brush that turns into a much larger fire. We'll do a controlled burn. Controlled retracements, controlled, measured, smaller corrections are much healthier for the market. It keeps us from this sort of dramatic roller coaster that we're now on. Why is the roller coaster so much more dramatic? Because the powers that be have deemed it's better for the stock market to go up to infinity and never pull back. But much like those of us who live in South Florida know, without those controlled burns, when a fire does eventually happen, it's going to be much worse than what it could have been had there been those controlled burns. It's just a very natural part of any cycle. This just happens to be the stock market or even commodities that we're talking about. All right, so moving on, a few other questions here. I did want to talk about, energies. We talked about closing in on an overbought zone. By the way, a lot of folks are asking me, Rob, do you want to short crude? I'm open to it, but something that I like better would be shorting heating oil. Remember, crude oil carries with it influence on the RBOB unleaded gas market, which you can trade via the RB futures or the UGA ETF. Heating oil is another market tethered to crude. And I like the crude, look, I'm a futures trader. So I like the seasonal and I like the actual structure of the heating oil market. So as crude moves higher, that's the tide that lifts all boats. Heating oil goes with it, but I like the heating oil short quite a bit. All right, so that might be a better bet in some ways. In addition to, or just cast a wider net rather than going, headlong into crude and crude only. Kind of disperse that capital, disperse that idea just a little bit. Maybe a little bit of RBOB, maybe a little bit of heating oil. I like heating oil right now. Another thing you can look at, and I've been studying this. This is a really cool thing you can do on your own, and that is I think a lot of us have become sort of amateur traffic studiers, and you can go to the TomTom, yes, those GPS people, and look at traffic. And there's a couple interesting things about traffic as we're watching the reopens. We're seeing that traffic for rush hour to and from the office is increasing. But the consumer wasn't the only, in the US, the US consumer wasn't the only one holding the economy afloat. Consumers in other countries were definitely doing the same thing too. So until we start to see evening traffic return to its 2019 levels, Q3, Q4, until we start to see weekend traffic return to its 2019 Q3, Q4 levels, people are going back to work. But that doesn't mean the economies are getting going. Another traffic tendency or trend to watch is midday traffic. Midday traffic in many ways can be really tied to sort of industrial activity, industrial output. And those are not those weekend, those evening, those midday traffic trends are not quite where they need to be. So one of the things to keep in mind is, yes, people are going back and forth to work. We are seeing reopenings, but I'm, for the most part, fading these reopenings. What does that mean? Fading means as the markets are optimistically driving the ETFs of countries like Germany, France, Italy, the UK higher, I'm actually shorting into that strength. So that would be EWG, EWQ, EWI, EWU, right? So I am actually fading a lot of those markets. Another market that I'm actually interested in looking at short is Mexico. Not just EWW, the ETF, but also the peso. I'm actually interested in shorting the peso as well. So a lot of times, my futures and currency traders out there, that combo of the country and the currency, the country ETF and shorting either the futures contract or even the forex is a really cool combo. We're doing something similar with the Canadian dollar in Canada right now. So Brazil would come a close second. I really like the structure of EWZ to the downside. So Brazil's another one that I would keep an eye on. All right, let's tackle a few questions here as we round out our conversation. I hope this has been helpful. You might want to, I know I've thrown a lot of ideas and a lot of symbols at you, but of course you can replay this and take a look, and maybe on the replay, bring your charts up on one screen and bring me up yakking at you on the other, and take a look at some of these symbols alongside the charts, and you'll see, okay, that's what she's seeing, and that's where those opportunities may be. All right, so a few questions here, and that is R2D2. Oh, did you see Luke and Yoda here too? Yeah, Luke and Yoda, absolutely. What's the fundamental argument for shorting financials? Is it 100% technical? Andy, generally speaking, low rates like they are right now are not necessarily beneficial to financials. It's not just technical. I don't, I'm glad you asked that, Andy. I don't ever subscribe to the secret squiggle, right? I don't believe technicals hold all the answers. I think they can confirm a lot of what we're seeing macroeconomically, fundamentally, psychologically, but I don't subscribe to the secret squiggle telling me everything to do. Never have. However, when you look at the rates, when you look at earnings for banks, I think it's a good market to focus on to the short side for a while. Yeah, absolutely. So it's a combination. It's a combination. We're trying to get rich by I'm not out to get anybody, but we do play a zero-sum game, don't we? And people who don't know that learn that very quickly. This is a zero-sum game. And, my father-in-law has a great saying, and I try to live by it every day. If you're going to be dumb, you better be tough. Yeah. All right, next is, how far back do I look for highs and lows with the V-score? Tim, it depends on the time frame. For a daily, it's about a year. For a 1-minute chart, it's a day. Let's see. I appreciate all the comments, gang. Thank you. And yes, I have a newsletter. It's a free newsletter. I share my ideas just like I'm doing here, only in writing. And it's called the Countdown Trader. You guys can check that out. The link is in the comments. And thank you for that. Do I look at RBOB further out during seasonal trends? William, I love the question. RBOB is going to be tethered. William, here's what I'll tell you, check out the TomTom data. Check out that TomTom data. I know that rate of change of traffic has been really, really good at tracking the demand and tracking the trend in energies, specifically crude and RBOB. I know OPEC and OPEC Plus, and even in terms of the U.S., have been actively talking about what they will do, what they could do. But at the end of the day, traffic data does not lie. Traffic data really has been, for me, where I've had to let go of aggressive shorting of the crude oil market, which I was doing for a while, because as that traffic data sort of normalizes to 2019 levels during certain segments of the day, the segments that I've discussed, then I know that demand might be there. Heck, we had a drawdown last week, mind-boggling. Remember, tomorrow 4:30, William, and I'm sure you know this, 4:30 tomorrow, we get the API data to see what kind of mood and what kind of demand we have in crude, RBOB, the distillates, all that good stuff. So if I look further out, though, right now I'm not looking any further than those traffic trends, my friend. All right, next up is loving this format. You know, this is something we do every week. It just happened to be my turn this week. And again, I really appreciate you guys joining and asking the questions. Thank you. It's been on a Monday after the markets have been trading, you guys log in. Oh, it's very cool. And I appreciate your time, guys. Can we get access to more of my live sessions? We do this every week. So it'll be someone else's turn next week. But I broadcast daily in Simpler Futures, which you can check out at the Simpler Trading website. My favorite books. Oh, you see how much I read. Gosh, it depends. I mean, right now, I'm looking at what's behind me in my own video. I'll tell you, Moneyball, which you'll see here, is an MVP machine, which talks about, that's one I really like a lot right now. If you saw the movie, you'll love the book. And another one that I'm liking right now, Hooked is always an interesting one. Nir Eyal, Hooked is always a really interesting one. I do like that one. I just picked up Think Like a Rocket Scientist. I've been enjoying that one a lot too. So I don't really necessarily only read trading books. I actually read very few trading books. One that's really interesting is Thinking in Bets by Annie Duke. I'm reading a lot of poker books right now, and that's one of them. The other one I just got is, what was it called? The Professor, the Banker, and the Suicide King. It's about one of the largest poker games in history. Again, the mindset of poker and having to make bets when you have incomplete data and a lot of unknown is very, very much something that us traders deal with. So if you're a poker player, I think you have an interesting mindset, of interesting wire that's probably pretty well designed to do well in the markets as a trader. Okay, I speak about the yen a lot. Why is the yen so important as opposed to watching the pound or the euro? Colin, because of the carry trade, because of the fact that the yen historically has been such an inexpensive currency to borrow. You borrow with that very inexpensive yen to fund the purchase of higher yielding assets, which are normally going to be other currencies with a higher central bank rate, think Australian dollar, New Zealand dollar, and stocks. So that's very often going to be why that yen is so important to see flows in and out of certain currencies. The calm dolls and the yen is going to tell you a lot because remember, the currency markets are the biggest in the world by a landslide. And so when we see flows in and out of certain currencies, it does tell us quite a bit about what might be happening in equities. All right. Is that Spider-Man? Oh, yeah. I'm your friendly neighborhood trader. All right. Do I believe in stop losses in day trading? Swami, I do, but not in sort of the traditional sense. I believe in volatility-based, historical volatility-based stop losses. That's something unique we do in the futures room, where we use historical volatility. It's a process I created for forex about 7 years ago using data from a third-party source where, hedge funds have used historical volatility for decades to determine their VAR, their value at risk. We do so to understand typical price movement ranges, support, resistance, and how much a market could move. And so, yes, I do sometimes place stops. I'm not a big fan of physical stops. I mean, it's not for everybody, but again, in true transparency, I don't typically place a physical stop. I always know where they are, and they're almost always going to be based on some combination of volume, time, and historical volatility. Do I think small caps are going to do well now? No, Enduro, I think small caps are going to continue to struggle. KRE is probably my favorite short, though. Do I hedge? I do not hedge, but I do own Bitcoin, and I'm a big fan of long gold, long bonds, and long dollar. And we're just going to flat out run out of time. But, if you're interested in some of these things, gang, by the way, I broadcast daily in the Simpler Futures room. So if some of this conversation has piqued your interest, check out a trial. It's $7. Come kick the tires. We talk about all this kind of stuff every day. So, if it's been interesting, and again, thanks for the time. Yeah, come check us out over in the Simpler Futures room. Can the Fed lose control? Yeah, of course, John, but not yet. Not yet. They haven't yet. Do I ever think that the Fed might lose control? They've got firm control of the psychologist market right now, and that's all we need to know. Blue pill, red pill, right? Which is kind of what we started this conversation on. yeah, you guys can catch me in the futures room every day, talking about all this kind of stuff. And we'll be day trading in the morning. Mondays and Fridays, I think about these longer term, bigger picture, red pill, blue pill conversations. During the week, we'll keep up with those trades, and then we'll segue to some day trading, which is what I'll be doing tomorrow. So as always, gang, thank you so much for your time. This was actually a lot of fun. I appreciate it. I appreciate your time. I'll look forward to doing this with y'all sometime soon. Again, thank you for your time and attending this session. And next week we'll have another speaker and talk about the current state of the market. And if you need to find out more about what we do, check out simplertrading.com. And I'm in the Simpler Futures room 5 days a week. All right. Okay, gang. Thank you so much. All right. Appreciate it.